Thanks for joining us. I'm Marlon Bowling with you here on the Market Day Report, and we're going to take a look at your grain and livestock market action. And boy, on that livestock side, things have been pretty exciting already to start out the week. Grain, maybe not so much, but we did have soybeans making a bit of a reversal last time we checked. So let's go ahead and dive into this here and see what's going on with the grain trade right now. On the corn, we'll focus there first. And on the corn board in Chicago, we currently have the December contract now trading at 347.5. So that would be down a penny and a quarter. March down a penny. Let's look at soybean trade. Right now on the soybeans, we have the November down 3 1/4, January down 2 1/2 at 9.84 per bushel. That's just one tick off of our low of the day. And in the wheat trade in, Chicago, December, we're down 4 at 423 1/4, one tick from its low of the day. Kansas City wheat, we have December now trading at 421 3/4. That would be down 3 1/2 cents. Minneapolis spring wheat trade, it had been trading higher, and it's just hanging in there. December up a half cent at 617 1/2. We have July 1 3/4 higher at 641. The cotton market on the December contract right now would be 42 points higher at 68.62 cents per pound. Let's talk with Brian Splitt of Allendale Incorporated in McHenry, Illinois. He joins us by phone right now. And Brian, good to visit with you here. Kind of a quiet action here in the grain trade. I see where just as I was walking in the studio, we got some brand new grain export inspections numbers from USDA. Didn't know if you could read much into market meaning out of those numbers or not today.
There's really nothing as far as good news in the inspections. Corn inspections year over year are down a little over 300,000 tons, as far as the same week this week last year. And year over year for the whole marketing year, we're actually down a little over 4 million tons. So, the product is not leaving the country right now at the same rate it was last year, and that goes for soybeans as well, not to as large of an extent. But this corn market's stuck in a sideways trading range, much like it was last year. The range is probably about 5 to 10 cents tighter this year than it was last year. The options are indicating the same thing, that these markets are just dead in the water right now.
Okay, what is your opinion about what we may see when we get USDA's harvest progress update later on today? What have you been hearing from your clients around the country?
Guys are finishing up with beans right now, and corn's wrapping up in some areas. Further north, we've had some snow in Minnesota and some rain over the weekend that kept some producers out of the field there. So, technologically, we can make large advancements in short periods of time when there's open windows. I don't think the idea of harvest delays is really going to impact the market very much for corn. I mean, it doesn't take the production out of the market. It just delays when it's going to, be out of the field and in the producer's hands. And I don't know that anybody's in a super hurry to get the corn out of the field here if they don't have a place to put it. Sometimes letting it dry down in the field, if that's possible, is the best alternative. But I think harvest delays is a non-issue right now. I was just reading something that the FDA is possibly looking to pull their health claim that soy protein reduces the risk of heart disease. It's interesting that when that press release came out, the soybeans did a little about face here today. They're about 10 cents off their highs.
Yeah, interesting tidbit there as well. What do you hear as far as the planting progress in the southern hemisphere in Brazil and Argentina?
Brazil's right at their 5-year average. They're fine. Little bit of talk here that now too much rain in Brazil, and had some hail issues in Argentina, but it's very early in the season there. As we get closer to the end of the year and into the beginning of the new calendar year, that's when their reproductive phases will be really in full gear, and that's when they're going to make their crops. So it's pretty early to get excited about weather quite yet, but you got to keep your eye on it. Technically, right now, the soybean market's in a nice uptrend. It has been since mid-August, and we're really testing that uptrend here. We had support there last week, and at the 200-day moving average, I would say, January soybeans below the 980 area does not look good technically. And, if we take that out, that could lead to, some additional technical selling. We do have a report coming out on, November 8th or 9th, and that'll be an update on the yield. USDA lowered yield on the last report, so that'll be up in the air on this report as well.
Okay, Brian, we'll talk a little livestock when we come back in just a moment. Our guest, Brian Splitt of Allendale. You don't want to miss our livestock discussion coming up next. Well, the big news in the livestock trade this morning had to do with the cash cattle market that developed very late Friday afternoon. And if we look at our livestock summary, that will kind of spell it out for you. On the livestock summary from Friday afternoon, we had the live cattle, live basis cattle on the cash market, actually gaining about $6 to $8 from the previous week. It was just a very late flurry of activity after nothing happening all week long. So 117 to 119 per hundredweight was the eventual price. And dress basis cattle were $7 to $10 higher than the previous week at 182 to 185 on that dress basis. Let's talk with Brian Splitt about what the market is doing this morning. He's with Allendale Incorporated in McHenry, Illinois. Boy, we had, last time we checked here on live cattle, Brian, we had the one contract anyway, hit limit up here. We had that December contract going limit up. It's still there at 123.82, so we're $3 higher. February 277 higher at 128.52. Deferred's kind of less and less to the upside as you go further out. Now, if you look at the feeder cattle side, here you have November now trading 377 higher at 160.25, only a nickel off its high of the day. We have January up $3.83, trading at 159.78 per hundredweight. That's only 2 ticks off of our high of the day right now. Fairly impressive activity when you look at how the charts are performing here in the early going this week here, Brian, but we're getting toward the end of the month.
We are, and you know, the end of the month, part of that story is that you know, the October contract that's in delivery here, and that has no limits, so they've got it pegged right at about 120 right now, which is up 467 on the day. So a big move there. December cattle is locked to the limit, and you know, if we can maintain that trade through the rest of the session, if we can get February to go limit as well, which it's already traded there, we'll have some expanded limits tomorrow. Feeders are up sharply. I can tell you that technically this December contract, it did gap higher. You know, we had some good trade late last week that took out the July monthly highs. Technically, that looks strong, gapping higher today, left about a $2 gap below the low of the day so far. And we're making new contract highs now, taking out the June monthly highs. So, you know, any buying excitement that wants to be in this market still is going to move into that December and should have already done that. But, you know, the cash trade is going to keep the shorts on edge here, and we'll see how the electronic platform trades on Wednesday. But usually that's a pretty good indicator when you see the offers there. They may not actually trade the electronic platform, but cash will probably trade that afternoon at those levels. So. All right. There's a lot of strength on the market right now.
Lean hog trade has been a little bit firmer, but we have December lean hogs currently trading at 64.65. That is up 20 cents. February up 25. Thanks, Brian. Brian Splitt is with Allendale Incorporated in McHenry, Illinois. Still limit up December cattle.
My goodness.
So far.
And the day is still young.
Yeah.
Okay, we'll keep watching it. Little excitement for today in the markets. Markets editor Marlon Bowling.